On Small Cap Power, we're pleased to be with Whitney George, Chairman of Sprott U.S. Holdings, and also the Portfolio Manager of Sprott Focus Trust. Whitney, thank you for joining us here.
Thank you, Rachel, for having me.
Yes,
delightful.
Very good. We invited you here because I would love to talk about your career, your investment philosophy, and all that good stuff. Okay. So please start off with your career, please.
About 1984-85, it was time for me to figure out my career.
Right.
Warren Buffett had been involved with a family business in our family, and my mother had always told me, pay attention to what this guy Warren Buffett's doing. But of course, you never listen to your mother, particularly when you're in the early 20s. And so, but after that, I figured it out. Started paying a lot of attention to value investing, what Warren Buffett was teaching. Hooked up with a couple of other larger brokers, more senior than myself, learned a lot from them. And then I finally, Chuck Royce became one of our best customers. Chuck Royce was very famous for small cap and micro cap investing. And I remember clearly during the crash in 1987, you couldn't get anybody on the telephone. And calling Chuck, and he picked up the phone and he said, well, what do you like? And I said, well, we like this stock. And what else? We like that stock. And what else? And after about 5 names, I didn't know anything else. I said, sorry, Chuck, that's all I know. And Chuck said, I want you to buy 10,000 shares down every 1/8 of a point until they stop. And that was in the middle of the crash when everybody was pulling their hair out, and you know, Black Monday, I guess it was. And that's kind of was my first lesson in what a true contrarian investor is.
So that is your philosophy now?
It has been my philosophy ever since. You know, be fearful when others are greedy, and greedy when others are fearful. Buy stocks like you buy your shoes or anything else when they're on sale. So I went to work for Chuck Royce from 1991 until I left at the end or the beginning of 2015 to join Sprott. Kind of helping on the side with strategy, managing a couple of small products that I brought with me from Royce.
Well, in 2017, what is the focus for Sprott, in your words?
Oh, we are more focused. We've just announced and are about to close the sale of our Canadian diversified mutual fund business to the managers of that business. During the bear market in precious metals, some of the younger up-and-coming portfolio managers wanted to diversify away from being singularly focused on resources and precious metals. But I've been a believer since 2000 that the money printing is not going to end. Every time there's a crisis, the solution is to print more money, and that the long-term issue is going to be the debasement of currencies and the loss of purchasing power for people's money. So Sprott aligned very nicely to that general belief. While being a generalist, we're in a global business, a commodity business, and with an opportunity to address a more global audience and build the firm in a way I think Eric originally envisioned, which would be a highly profitable, employee-owned enterprise where shareholders' interests and the employees' interests are as perfectly aligned as possible. I'm a very large shareholder of Sprott, all the shares of which I bought in the last 4 or 5 years on the open market, and big believer in asset management as being a wonderful business. Yeah,
you mentioned it while we're talking about your career that you're a value investor. So do you think that that is just the top tip you can give to our investors today?
You know, there's still a lot of value out there. Everybody talks about how extended the markets are. Of course, we're in the 9th year of a bull market since the crisis, and there are some very, very expensive stocks, but the market has become reasonably narrowly focused on just the biggest names, because that's where indexing, which is the rage now, drives you. The biggest weights in those indexes get most of the money, and that sort of self-perpetuates. It's a bit of a momentum trade, but below that, there are a lot of neglected areas, a lot of neglected industries. There are a lot of parts of the economy that are out of favor and struggling, and that's kind of where I tend to look for things.
Gotcha. Well, let's talk about some stock picks that are maybe in your top 2 or 3.
Well, at the top of the portfolio is a company called Franklin Resources. It's the Franklin Templeton Mutual Funds. The knock on that company is that they're in active management, and the trend has been money flowing out of actively managed, maybe where there are higher fees, into passive strategies. I think that will have a very ugly ending at some point, but it's very much been a major theme for the last 9 years. So the stock trades at about 10 times earnings when you subtract out the cash they have on the balance sheet, which is not a very expensive price. The founding family, the Johnson family, still controls it. So we have an adult in the room to protect shareholders. They care. And when you look at the capital they return to shareholders through buybacks, dividends, special dividends, they've treated shareholders very well. And I think the stock could be worth 30–40% more than it is today if fairly priced as a business.
Right.
I like protein as a theme.
Okay. Why is that?
Population is growing.
Okay.
As the world gets a little bit wealthier, people's appetite to improve the quality of food, tends to include more protein. So that's a long-term theme. It's not going to reverse. We're not going to slow down population growth. And yet, in the agricultural space, for instance, Cal-Maine Foods, which is the largest egg producer, it's a very efficient protein in this country. The problem with the business is Wall Street doesn't like it because you can't predict quarterly earnings. Now, if you take a long view at some of these companies, say look over the decades, you see their cycles, earnings are volatile, but over time you can measure the value creation and the building of that business in a way that is wonderful. You'd like to own the whole business, and that's kind of the way I look at companies. I like to buy companies where I want to own the whole business with a long-term horizon, bought when things are out of favor. Another example I'm interested in is a company called Gentex.
Gentex, okay.
They make rear view mirrors, but they make the really high-end rear view mirrors and the really high-end where they have lane change detection and all this technology. It's used on high-end models, but is increasingly going downstream into lower-end models. Very well-run company, super high margins, buy back stock, have a lot of cash on their balance sheet, pay nice dividends. But it trades at only about 11 or 12 times earnings because people are worried that autonomous driving cars are going to eliminate.
It won't need that.
We won't need rear view mirrors. We'll have cameras, and who needs even to look if the computer's driving the car? So these things take a long time to play out, but sometimes people worry about it. And therefore, a great company with great financial characteristics can be priced at a big discount to what I think it's fundamentally worth as a business.
Right. Well, thank you so much for the detailed stock picks. Now, lastly, to close, what is one mistake you've made in your career that you've learned quite a lot from and you want to share with our audience?
Have a discipline and stick to it. So the biggest mistakes that I've made is when I've bought things and circumstances changed. For instance, they would do a big acquisition and leverage up their balance sheet, and I have a discipline that doesn't afford me to invest in levered companies. But because I had it, I made excuses, circumstances changed, and I in effect violated my own discipline by not reassessing the conditions and say, would I buy it today? Well, no. Well, in that case, sometimes you shouldn't hold it anymore. If you wouldn't buy something on any given day, you probably think about whether or not you want to own it. So I think sticking to one's discipline when circumstances change, don't be delusional, don't be entrenched, and make a decision.
All right. Well, Whitney, thank you so much for everything today.
Thank you. Rachel, it's been great.
To watch more videos from the Sprott Natural Resource Symposium, make sure you visit SmallCapPower.com.